This has far more benefits. In this episode, I'm going to address the question, what is better than a 529 college savings plan? When I show you, you're going to go, why would anybody ever want to put any more money into a 529 plan? Well, I agree. You'll find out why. So my name's Doug Andrew, and I've helped people prepare mostly for long-term goals like retirement, optimizing their assets, minimizing taxes, and so forth, so they won't outlive their money. But many people that I've worked with like to help their children or maybe their grandchildren save for college education. Now, I have a certain philosophy about just shelling out money for your kids' college education. I required my children have some skin in the game. My wife and I, we have 6 children. We never paid for their college. They never expected us to, but we would have matching funds. If they got a scholarship or a grant, we might give them a matching amount, dollar for dollar. Or if they were able to come up with this much, we will help them or loan them the money or what have you. But nonetheless, rather than use a government 529 savings plan, why would you want to do that if you have all these strings attached or restrictions? Let me explain what they are and what's better. When you set up a 529 plan, basically, it's an account where you can set aside money. Of course, there's limits. And the money gets to grow without paying tax, sort of like an IRA or 401k. But you don't have to wait till you're 59 and a half to access it. But you must access the money for the purpose of funding college, okay? If you don't do that, you have to pay tax on that money. So it's very narrow. It's only to help your children with college funding. And you say, well, what's wrong with that? Well, because there are many times with our own children and many of my clients' children that they got scholarships. They worked and they had a way to be able to get through college without having to use that money. And they wanted to use that money maybe to start their first business or to buy their first house. You can't do that. You're going to have to pay tax now because you didn't use it for college. Why do you want those restrictions on the money in an account that is sort of earmarked to fund college if you change your mind or your children don't need it for college, but they could sure use it for something else? So people say, I've never thought of it that way. By the way, if you're socking away money in a 529 plan and you get in an accident and you die, and I've seen people that don't make it, well, a 529 plan doesn't have a self-completion feature, something in there that means that it's going to be blossoming instantly if you happen to die. People say, what are you talking about? Of course it wouldn't. Well, mine does. It's what I call the laser fund. And it has all the benefits of a 529 plan and a whole bunch more without all the restrictions and the strings attached. So let me show you how very successful people will use a maximum funded indexed universal life insurance contract, which I call the laser fund, to accumulate their money at average rates of return between 7 to 10% tax-free. They can access that money anytime for any reason. And they can leave it behind for their children to use, for the purchase of a first home, all kinds of goals instead of being earmarked only for college. So let me explain it to you. If this is beginning to intrigue you, I've just gotten started, but share this video with other people who have 529 plans or are thinking about setting up a 529 plan. They really need to watch this video first. But I post an in-depth answer to a financial question like this almost on a daily basis. So subscribe, click the little bell to be notified because I do post something almost on a daily basis. And then at the end of this episode, I'm going to gift you a copy of my most recent 300-page best-selling book. So stay with me. Now, a 529 college savings plan is a qualified account where the government is giving you a tax break as your money grows. You don't have to pay tax on it. I have a beatitude in my life, my family. Blessed are the flexible, for they shall not be bent out of shape, okay? 529 plans aren't flexible. You cannot access money. I like flexibility because life is unpredictable. So as I indicated, my favorite vehicle is called the Laser Fund, and I want to gift you a copy of a book that will explain this to you in more detail. But here's what I do. If I want to set aside money for goals like college funding, I can put that into a Laser Fund, and I can set it up to accommodate, $50, $100 a month, $500 a month, $1,000 a month, whatever I want. I don't have to put that much in. There's no minimum requirement. When I'm funding it, I put in the money and it accumulates tax-free. Why? Because this is a maximum funded indexed universal life insurance contract. You're using a life insurance policy for living benefits, okay? You're not using it for death benefit. You're actually funding the insurance way, way, way more than the actual cost of the insurance. And this was an idea that E.F. Hutton had back in 1980 when they designed this for living benefits like retirement or tax-free accumulation. Why? Because for over 100 years in the Internal Revenue Code, it's like a sacred tax-free cash cow. It's the only financial instrument in the Internal Revenue Code that allows you to accumulate your money tax-free. So, same benefit as a 529 plan, right? You can access the money tax-free. Hello? And then when you ultimately die, and sometimes people die sooner than later, unfortunately, it blossoms and transfers tax-free. So that means if you were socking away $500 a month, earmarked for college for your kids or your grandkids, and all of a sudden you pass away, it would blossom into maybe $500,000 or $1 million instantly. And it would be totally tax-free. It's self-completing. A 529 plan is not self-completing if you die. Same thing if you get disabled. People say, how much does that cost? Well, nothing's free, but it doesn't cost me anything. It's being paid for with a minuscule portion of money that would otherwise go out the window in unnecessary tax. If I put money in normal savings accounts that are taxed as earned, or even in a 529 plan, if I change my mind or my children don't need the money for college, they want to use it for something else. The Laser Fund, you can use the money for whatever you want. It will not lose its tax-free status. So it has more flexibility. I can put in large amounts. I don't have to put in anything. I can coast. I can access money. I could put in $100,000 and 30 days later, I could pull out $50,000, $60,000. It has all kinds of flexibility. So people, when they learn this, they go, why would I ever fund a 529 plan when I have the benefits of a 529 and a whole bunch more? Yeah, that's exactly the conclusion I've come to. But do you know the Laser Fund has averaged between 7 to 10% net internal rates of return tax-free for more than 4.5 decades? Sometimes people say, oh, I've never seen that. How come I've never heard of this before? Well, because you've never heard of it, you maybe think it doesn't exist. Hey, I have seen thousands of these, and they work beautifully for goals like college funding, but for emergency funds, for real estate management, for business working capital, for retirement. So my favorite vehicle is the Laser Fund because it allows you to accumulate your money tax-free. You can access the money tax-free. When you die, it blossoms and transfers income tax-free, and there are no strings attached. So it's the perfect college savings plan that knocks the socks off of a 529. So if you would like to learn more about how this can work for you and use it for all kinds of goals, I call it the dream solution for all kinds of goals, whether it's college funding, retirement, emergency funds, or all of those things that I just mentioned. So this is what I would love to gift you, is a copy of this 300-page best-selling book. These have been flying out of the warehouse. We just printed the 8th edition, and it's actually 2 books in one. This one is about 200 pages, and it contains all the charts and graphs and explanations comprising 14 chapters. That's for the left brain learners, and you'll see some examples of how you can use this for goals such as college funding. But if you learn more by stories, your right brain, you flip it over. And this one is about 100 pages, 12 chapters that give all kinds of stories and examples of how this works. Chapter 5 of this side talks specifically about how to use the laser fund for school, for life, for emergencies, because it is the best way to be able to have your money liquid for whatever purpose you want to use it for, safe from market loss, and in one of the safest financial industries in the world, the multi-trillion-dollar insurance industry, but earning predictable rates of return of 7 to 10% tax-free. And at the end of the day, when you pass away, because none of us are getting out of here alive, out of this life, okay? It blossoms and transfers income tax-free. What else does that? So click below, contribute a nominal amount towards the shipping and handling, and I'll pay for the book. I'll fire it out to you. And there's options there if you want to listen and learn, watch and learn. But this is to your brighter future as you begin to take ownership and you control your money and you have flexibility so you won't get bent out of shape.